We begin today, though, with a story we have been covering all week here on Yahoo Finance, the rise of the meme stocks, the role of the retail trader, and now the outrage over Robinhood, the platform, along with other brokerages, restricting new positions in the stock yesterday. Robinhood this morning allowing for buying to resume in a limited capacity. And Zach, there are so many different moving pieces on this front. Of course, we're continuing to watch the stock moves and the inflows to some of these stocks that have really been pumped up through these Reddit feeds, but also what we're seeing on the hedge fund side. And I wonder if we can start the conversation on that front, because Citron Research this morning came out saying they will be discontinuing short selling research this morning after 20 years. And Citron's fund, of course, one of those hedge funds that was short on Gamestop, posted significant losses because of what materialized in the markets this week. Founder Andrew Left posting a video on YouTube today saying the firm will now look to pivot in a big way. Take a listen.
Where we started Citron was to be against the establishment. We've actually become the establishment. We've done this whole thing without ever hiding from lawsuits, without ever hiding behind a pseudonym. But it's completely now lost its focus.
And Zack, Andrew Left, they're going on to say in this message on YouTube that he wants to bring investors stocks that can make 5 to 10 times more money, but he wants to do it, to summarize, in a way that is more ethical. Their business practices sort of hinting at the ESG side of it. It's gotten a little ugly over the last few days, whether it is on the hedge fund side or the retail side. And then, of course, now Robinhood, who we're going to be speaking to later in the show today, they have really placed themselves in the crosshairs because of actions taken yesterday.
Yeah, it's interesting to see because Andrew Left, of course, when you're kind of alluding to the ugly side of things, he was personally attacked by a lot of the people who were long GameStop and attacked him and his family really for being short GameStop. And it's one of those things we've seen play out here. I mean, you and I both covering, financial journalism here. As journalists, sometimes we get attacked as well when we cover some of these. We don't necessarily have as much of a vested interest as an Andrew Left or a Citron here in terms of shorting these stocks. But I mean, it's one of those things where it is interesting to see the response, because Andrew Left got all that attention mostly from, let's keep in mind, this group has grown here. Wall Street Bets on Reddit has now grown to more than 5 million people watching that. So I mean, he had some newfound attention. So perhaps not surprising to see him try and capitalize and pivot and go from, being the bad guy in this story to say, look, I was doing what you guys were doing before you were doing it. And I've done it for years, trying to find reasonable investment ideas out there. So tune in for more on that. So, I mean, it's a healthy pivot. When we return back to maybe this idea of who's at fault in all of this and the idea of retail investors maybe getting thrown under the bus in this process, we had that discussion yesterday with another platform that said, look, we had no choice in this. We had to restrict trading, not just on GameStop, but AMC and some of these other stocks getting some attention out there because of the back end. I know it's not as sexy of a story to cover here, Aikiko, but really, I mean, that's at the heart of this when we think about what went wrong. And we heard that from Anthony Denier, the CEO of Webull, explaining kind of, look, when volatility hits, we have no choice in dealing with the clearinghouses that takes your trade and really make sure that it settles. They've got to hold funds for 2 days. Take a listen to the explanation he gave us.
In reality, what's going on is that there is a 2-day settlement between if you buy the stock today, those brokerage firms that you bought that stock on have to fund that trade with the clearing central house called DTC for 2 whole days. And because of the volatility of these stocks, DTC has made the cost of the collateral for the two-day holding period extremely expensive. And we just can't afford, well, not Webull, we're not a clearing firm, but our clearing firm simply cannot afford the cost.
Yeah, so you heard there from Anthony explaining what went on. Of course, they reopened trading on those names. Robinhood as well has reopened limited buys on GameStop and AMC. But a key difference we're going to get into later on with our interview here in how Robinhood tackled this issue. You heard Anthony describing the clearinghouse they use, Apex. Robinhood cut ties with them back a couple years ago to build their own internal clearinghouse technology. And now I think that's a key piece of the story, is because, that was obviously a move that was made with profits in mind, some cutting trading fees in mind. And I think customers of Robinhood have a rightful question there to say, look, was profitability put ahead the customer service experience here? Did you take on unnecessary risk to do that? And it's something we'll get into later on with our interview with Vlad Tenev.
Yeah, and I think, when you go back to the conversation from Webull's CEO, in some ways you could argue this is just the market mechanics at work. But the larger question for Robinhood does appear to be, did this thing move too quickly? And are they really positioned, both from a financial standpoint, but also from a technical standpoint, to be able to handle this kind of surge? Because, of course, we did get those reports that the company did draw down its credit line, got a fresh capital infusion from its investors, too. So a lot to get into with that conversation with Vlad Tenev a little later in the show.